the country, we have proudly witnessed the recovery happening. We express our deep gratitude for the significant support that we have received from all our stakeholders, be it the real estate partners, content creators, our investors, and not to forget our own team. They have played a massive role in this journey, which continues to remain progressive and promising. With the addition of 41 new screens, the highest in the industry in calendar year 2021, we have shown that adversities could not dent our passion. Our path ahead promises to be underlined by innovativeness and rigor and being enlightened with our lessons from the past. Our profound and novel initiatives on the F&B and consumer communications front will show significant impact in our journey forward. However, currently we are in the midst of the third wave of COVID-19, and this time we believe the severity of this wave on our business would be comparatively lower than the previous two waves. And we expect that our business would recover faster than expected. I will begin the presentation now and talk about the key highlights of Q3FY22 and also for the 9 months of FY22. In Q3FY22, we have the highest ever quarterly ATP of 226 rupees. We have the highest ever quarterly SPH of 97 rupees. Inox added 41 screens, as I just said, in calendar year 2021, which is the highest in the industry. We are also the only national chain that is net debt free. We have a strong liquidity position, and as of 16th of January 2022, we had close to 180 crore rupees in cash and cash equivalents. In Q3FY 2022, the revenue is 301 crores as compared to 21 crores for the same period of FY21. EBITDA is at positive 54 crores as compared to a negative 79 crores in Q3FY21. In Q3FY22, PAT is at a positive 17 crores as compared to negative 83 crores in Q3FY21. For 9 months, FY22 revenue is at 380 crores as compared to 29 crores for the same period last year. EBITDA is at minus 108 crores as compared to minus 144 crores in 9 months FY21, and PAT is at a negative 152 crores for 9 months FY22 as compared to minus 183 crores in 9 months FY21. Performance in our key operational metrics is as follows. For Q3FY22, we welcomed 94 lakh guests as compared to 5 lakhs in Q3FY21. In Q3FY22, occupancy was at 19% as compared to 3% for the same period last year. ATP is at 226 rupees compared to 153 rupees for the same period last year. SPH at 97 rupees compared to 73 rupees in Q3FY21. In 9 months FY22, the footfalls are at 120 lakhs as compared to 5 lakhs in 9 months FY21. In 9 months FY22, occupancy is at 16% as compared to 3% for the same period last year. ATP is at 215 rupees compared to 153 rupees for last year. And for these 9 months, the SPH is at 95 rupees compared to 73 rupees for the same period last year. We are glad to announce that in Q3FY22, we have progressively narrowed the gap in net box office collections and F&B revenues, and we are close to the pre-COVID levels. In December 21, we have achieved close to 90% of NBOC and net F&B of December 2019. And this is in spite of various restrictions put up by the state governments. We have tried our best to keep our fixed costs under control. However, in Q3FY22, we had footfalls of 94 lakhs. This has increased the expenses as compared to previous quarters. We can see that from the numbers, on a quarter-on-quarter basis, our employee benefit expense, including agency manpower, has increased from 28.4 crore rupees to 41.9 crore rupees in this quarter. This is because we were operational in more screens and more guests came to our cinemas. Power and fuel and repair and maintenance expenses have increased from 14.3 crore rupees in Q2 FY22 to 29.2 crores in this quarter. This again relates to the fact that we were operational in more screens. Our expense towards rent and CAM during Q2 FY22 was 40.4 crores as compared to 51.3 crores in Q3 FY22. We have concluded rent and CAM negotiations for almost all the properties till 31st December 2021, and the impact has been incorporated in Q3 and 9-month FY22. Our other overheads have increased from 11.8 crores in Q2 FY22 to 21.7 crores currently. In terms of shareholding structure, as on 14 January 2022, FIIs owned about 16.14% of the company. The DIIs own 23.83%, promoter and promoter group own 43.60%, and public and others own 16.40% of the company. The share price as on 14th of January was 378 rupees 80 paisa, which gives the company a market capitalization of about 4,634 crore rupees. Currently, 572 screens out of our 667 screens are permitted to operate at 50% or less capacity. 47 screens are allowed to operate at 100% capacity, and in 2 states with this total shutdown, we have 48 screens. Hence, 48 screens are totally shut as per the respective state government guidelines. In Q3 FY22, we opened cinemas in Guwahati with 4 screens and 183 seats. We opened a cinema in Prabhatam Grand Mall, Dhanbad with 4 screens and 888 seats, and in Worldmark, Gurugram with 5 screens and 904 seats. Beyond FY22, we have signed up to the extent of nearly 135 properties, 935 screens with 1,73,000 seats. And once this entire pipeline is fully implemented, we will have 297 properties, 1,619 screens, and nearly 3,27,000 seats. At present, we are operational in 18 states and 1 union territory, present in 70 cities with 158 properties, 667 screens, and approximately 1.5 lakh seats. In Q3 FY22, we had 5 blockbusters, namely Pushpa The Rise, Spider-Man No Way Home, Suryavanshi, Anathe, and 83. And we are delighted to inform you that we have a healthy lineup of movies already waiting for release. We have an extremely rich pipeline with movies like RRR, Jersey, Prithviraj, Attack, Badhai Do, Gangubhai Kathiawadi, Jayesh Bhai Jordar, Bachchan Pandey, Radhe Shyam, Batman, Death on the Nile, Doctor Strange, and many, many more. So we have movies in all genres and all languages. Currently, our cinema operations are affected due to the third wave of COVID-19. We have already concluded negotiations for rent and CAM up to 31st of December 2021. With the advent of the third wave of COVID-19, producers and distributors have deferred their movie releases. Majority of the producers and distributors are waiting for the situation to normalize. Third wave of COVID-19 seems to be less severe, and as a result, we anticipate to reach normalcy comparatively soon. As far as CapEx is concerned, of the 41 screens to be opened in FY22, we have already opened 24 screens. In the remaining 17 screens, 80% of the work is completed, and we would require an additional CapEx of 10 crore rupees to complete it. I would also like to reiterate that our liquidity position is very strong, and as on 16th of January 2022, we have close to 300 crore rupees, which includes undrawn limits of 120 crores. We also own 6 cinema properties and a head office. As on 16th of Jan 2022, our gross debt was only 89 crore rupees. Well, friends, that was a brief about the quarter and what has gone by, and we can open up for any question and answers if you have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Mr. Vikram Ramalingam from Maybank Kim ENG. Please go ahead.
Yeah, thank you, sir. Great performance given the overall challenges that are there. My question is regarding how in this quarter the Pushpa Hindi version, it did phenomenally well, better than expected. And of course, that's a good thing on the face of it. But doesn't it pose a challenge of how to allocate screens? Because ideally you would not expect it to do well, and in that situation you would probably assign your screens to, let's say, another new Bollywood Hindi release, especially in the northern and the western belt, where Bollywood tends to do better than South Indian movies with Hindi dubbing. And I realize it's a good problem to have, but how do you manage the situation then? I mean, first of all, is my question clear as to what I'm asking?
Well, I think you are saying that how do we allocate shows to Pushpa, which is a movie which is not in Hindi, but it's dubbed in Hindi. And how do we give allocation to this film when we have other movies also, whether it's in English or in Hindi? Am I right? Is that...
Yeah.
Let me tell you, Vikram, let me tell you that we are happy that Pushpa has done well. We are agnostic to the language. We know that today's audience is very discerning, and we have enough screens. So today when I talk about 67 screens which we have, only 48 screens are shut in totality. Otherwise, we have ample screens to showcase movies in English, Hindi, other Indian languages, whether they are dubbed in any language or not. So that's not an issue at all. And any movie which does well, I think it's great for the entire industry. And we'll be happy to showcase any movie where we have footfalls coming in show after show.
Okay. Thank you. My second question is regarding this increase in SPH. I mean, again, superb increase, superb jump in the SPH numbers. My question is, did it happen because people are preferring higher value product because generally they tend to be more safe, and is that the reason, or are people consuming more because now people don't get to go out more, so once they come to a movie they enjoy more?
Well, it is a matter that we are pushing our F&B more. We are ensuring that people buy more food. There are more items per head sold, and we are working that the strike rate should increase. So these are the factors which have led to the increase in the SPH to 97 rupees from 73 rupees of Q3FY21. So these are various factors, including, as I've always said, that we have various point of sales, and our endeavor is that the point of sale should be where the guest is standing. So hence, we have got an app which has got a food icon embedded in it. One can buy food on that and pay. Number two, we have got LED kiosks all over our properties. We use scan a code and you can order food and pay for it. We have got a lot of emphasis on home delivery through Swiggy and Zomato. So all these factors have led to increase in our food sales.
Okay, and my final question is this. given that now still most people are using the hybrid fashion of work and over the weekends people are probably trying to avoid crowds. Is there any new pattern emerging in the way the crowds are drawing to your cinemas, or is it still typically Friday evening and the weekends that are contributing to the chunk of the footfalls?
Vikram, people are coming to our cinemas because they know that we are following all COVID protocols. We are following every standard operating procedure, and we are quite strict and firm about it with our guests and also with the internal team members. The trend has been in evenings and weekends for sure, so that has not changed at all. However, we are seeing that there are lots of people who are working from home, that the weekday evening shows have gained traction and there are more footfalls in those compared to, I would say, it's very difficult to compare because the numbers are not, I would say, identical or as much as we had pre-COVID, but we can see that the footfalls of weekdays have also increased over a period of time.
All right. That's it from my side. Thank you so much.
Thank you. We have the next question from the line of Jinesh Joshi from Prabhudas Lilladher Private Limited.
Hello, am I audible?
Yes, you are.
Yeah. Sir, I just wanted to know, out of this 84 crores of F&B revenue, what was the non-cinema F&B component in this quarter? And secondly, with respect to the SPH growth which we have reported this time around, can you share the quantum of price hike that we have taken?
Okay, let me answer the second question first. First, there's no price hike we have taken. We have only ensured that more items are sold per person and the strike rate increases. But otherwise, there's been no price hike. That's one. Number two, the non-cinema component, and I think you are referring to the home delivery via Swiggy and Zomato, is minuscule. But then it's picking up. Very difficult for me to share those numbers with you, but I can say that we have seen a month-on-month increase in home deliveries and takeaways.
Okay. So basically this SPH of 97, I mean, it includes the non-cinema F&B revenue as well, but the component is not very high, and whatever growth we have seen is because of the in-cinema consumption which has taken place. That is the correct understanding, right?
Absolutely right.
Yeah. And so one last question. If I'm not mistaken, majority of our rent agreements were to kind of shift to the pre-COVID terms in FY23, but now with the third wave hitting us and quite a few states imposing restrictions, I mean, do you think that these negotiations can extend well beyond FY22 and we may see some spillover in 23?
So, Jinesh, our teams are in touch with the developers and the owners of properties. And let's see, we are quite optimistic that they will realize that, yes, again, we are in deep problem. And they will come out to help us as they have done it for the first two waves.
Okay, sir. Thank you so much.
Thank you. Participants who wish to ask a question, kindly press star and 1 on your touchtone telephone. Participants who wish to ask a question, please press star and 1 on your touchtone telephone. We have the next question from the line of Nimish Patil from Escapedia. Please go ahead.
Yes, thank you for taking my question. This is Nimish here. I am a avid fan of cinemas, movies, and especially Inox. And I'm an independent investor basically in Inox. So I wanted to know, sir. I know looking at the results, the company has done a fantastic job. In terms of the revenues and the profits. I mean, we almost got into profits last quarter. So I wanted to know, sir. When do you foresee the company to get back into profits, prior to the COVID levels, the profits that Inox was making earlier? When should we expect to see Inox back in net profits?
Well, Nimesh, I think that whatever we've done in Q3, we are positive in the PAT as well as EBITDA. And our main aim is to go back to those days very, very soon, where we had a proper hustle and bustle in our lobbies, where people were coming for shows. There were about 20, 25 shows happening every day in every property. So I think we also waiting for that as you are. But I'm very hopeful, as I said, that Wave 3 should get over soon, sooner than later. And all the movies which have been deferred, the producers will start announcing the release dates. So I would say it's a matter of, let's say, a month and a half. That's what my personal opinion is. And then things will be back to normal.
Great. Thank you, sir.
Thank you. We have the next question from the line of Patanjali Srinivasan from Mirabilis.
Yeah. Hi. I'm just trying to understand that this SPH that has gone up. How do we compute it with respect to including these newer channels like the delivery partners that we are taking in?
As I just said, Patanjali, that the delivery partners, the contribution of that is very low. It's minuscule. Primarily, it's all from the lobbies in a cinema. And the jump which we have seen in SPH from 73 to 97 rupees is something which I just spoke about, the various steps we have taken to ensure that the food spend per head goes up.
Okay. And do we have any plans of increasing prices with respect to the ticket prices or even the price of food items?
So Patanjali, any increase we take is after we do a lot of research. Let me tell you that when we increase the ticket price or whatever the price we keep of tickets or of food depends on the cost structure of the property, the paying propensity of the property, and the newness of a film. So it all depends on that. But in Q3, we knew that people are coming out. We had to win back their confidence more by having SOP and protocols for COVID in place rather than any other way. So Q3, we emphasized only on safety. That's it. We kept our prices the same. And whatever SPH, as I said earlier, has increased is because of more strike rate and more items per head being purchased by patrons.
Thank you so much. That's it from my side.
Thank you. Participants who wish to ask a question, kindly press star and 1 on your touchtone telephone. Participants who wish to ask a question, kindly press star and 1 on your touchtone telephone. We have the next question from the line of Utkar Somaiya, an individual investor.
Thank you for the opportunity. Can you please tell us the operating cash flow generated for the third quarter?
We have generated around 50 crore rupees in this quarter.
Okay. And I had a question on your average ticket price. Given that you had only 3 to 4 weeks which were very active in this quarter, and in spite of that, you had such a high number. So given that, when we go back to normal, do you expect what kind of average ticket price number do you expect?
See, again, Utkarsh, we can't forecast any average ticket price. As I said that there's a science behind us when we fix a ticket price for a particular movie. But yes, in Q3 we had some good blockbusters, and those are the movies which had majority of the footfalls. And because of that, we have the normal, regular blockbuster pricing, which we always have. And hence you see a higher ATP of 226 rupees. But I think that whatever pricing we have kept for blockbusters will continue, because this was nothing which was out of whack. That will continue. And similarly, if I can just take a moment and talk about food, even the food prices will continue as we have had in Q3.
Okay. What I was trying to understand is, since we have 12 weeks in a quarter and we had only 4 weeks of good sales, hence the base is higher, right? The denominator is higher. So when we go to a normal quarter, when we have the numerator also being as high as the denominator in terms of of sales, does that affect our average ticket price, or do you give us an average ticket price of? I hope you get my question.
Yeah, I do, Utkarsh. It will. See, it all depends on number of blockbusters we have. Which are the movies which command a blockbuster pricing? Which are the movies which command a normal pricing? So it varies. It's something which I can't tell you that maybe in Q4 of this year or Q1 of the next financial year we'll have such and such ATP. It all depends on the flow of the movies and whether they are regular movies, and hence the pricing is done accordingly. So very difficult for me to say that what the ATP would be for future quarters or including the Q4 of this financial year.
Okay, thank you.
Thank you. We have the next question from the line of Yogesh Kirve from BNK. Please go ahead.
Yeah, thanks a lot for the opportunity. So apologies for sticking to the same point on the ATP and the F&B. So is it possible for you to comment what is an sort of a like-to-like increase compared to, say, 2 years back? When I say like-to-like increase in the sense like Hollywood to Hollywood movie or the Hindi blockbuster to Hindi blockbuster. So is it possible to comment what has been the extent of increase?
Well, the pricing has been the same, Yogesh. Pricing has not changed. As I said that neither we've increased the pricing of food nor we've increased the pricing of our tickets. Whatever was there previously is there now. It's only that because in Q3 you saw a few blockbusters and the denominator, or it was only for 4 or 5 weeks, the ATP shown is high, but it's not that we've increased the ticket prices and the ATP has gone up. It is, when I look at various languages, when I look at genres, it is that the prices of tickets have not been increased. And when I talk about 94 lakh patrons in this quarter or 120 lakhs in totality, well, let's remember that the maximum admits all of the country have been from blockbusters only. Yeah.
Right. So how do we assess our pricing power going ahead? I mean, we have not taken any price hike, but really over the last 3-4 years, I mean, the ticket prices have been pretty much steady. I mean, because of the GST benefits been passed and all. So do we anticipate pricing power? Do we have leverage to increase prices from current levels? I mean, over the next 12-15 months?
So Yogesh, we always say that we will increase our ticket prices as per the rate of inflation, which is you'll see an increase of 3 to 4% every year. And for food, we say that you'll see an increase of 9 to 10% in SPH year on year. And that is something which we are maintaining.
Okay. So I was curious, I mean, is there a higher pricing power actually on the ATP front beyond 4-5%?
Yeah. So when you talk about higher pricing power, means that's why you see the insignias. You see how we are pampering our guests. That's the reason you see different formats under one roof, be it the MX4D or the LED or the Kiddles, IMAX. So these are all theaters which have a higher average ticket price. And yes, what also helps is that a patron watches a movie, the same movie in different formats. So that's how it goes.
Okay. Fair enough. The second question related to on the cost side, the fixed cost. Any sort of an indicative number of what could be the permanent savings that we could achieve on a per screen basis or any other way can highlight?
So Yogesh, this we've always been saying that once we go to normal levels, that is the pre-COVID levels, you should see a saving of about 8 to 10% on every line item.
Okay, so I would assume this would exclude lease, right? Lease and CAM.
Yes, because these are signed agreements. But otherwise, when I talk about having less people or power and fuel, other overheads, we will see a reduction in the line items over there.
Okay. Sure, sir. That's all from me. Wish you all the best.
Thank you.
Thank you. We have the next question from the line of Harit Kapoor from Investec.
Yeah, hi, good evening. Just had two questions. First was on the ATP side. So are we saying that, once the mix reverts to a slightly more normalized scenario, the ATP also reverts to, a little bit ahead of pre-COVID levels? Is that what you're saying?
Yes, it will be ahead of pre-COVID levels for sure.
Okay. And, as I see it, we have a higher ATP, higher SPH trending forward. At the same time, there's a proof of concept of, occupancies having come back, and you have taken certain permanent kind of cost rationalization measures, which in the normal scheme of things will aid your overall cost structure. So at it, assuming that FY23 is a normalized year, with occupancy coming back to pre-COVID levels, does that mean that your sustainable margin sees a step up? Is that the right way to look at it? Because all these three elements, which is ATP, SPH, and your cost structure, all are trending in the right direction.
Yeah, so that's the endeavor, Harit. That's the endeavor that the margin should go up. And that's why we are looking at our costs with a fine-tooth comb across every P&L and every line item. We are also ensuring that the SPH keeps on rising, and I just mentioned all the steps we are taking for that. And as I said, that the ticket pricing is dependent on the cost structure of the property and the paying propensity of the film or of the movie, of the people around it, and also the newness of a film. So these are the factors, but the endeavor is surely to increase the margins, and we are all working as a company towards it.
And my last question was, it seems like the big films, get bigger in terms of their collections. Is there a possibility that going forward the mix gets higher towards blockbuster versus mid-sized films? The reason I ask this is because it also helps your average ATP. So, is that something that you've been thinking about? Is that a possibility, a hypothetical, over next 1 or 2 or 3 years that it starts to trend in that direction?
I doubt that, Harit, because remember, we have lots of movies being made in India. If I remember right, in 2000, in FY2020, we had about 1,000 or 1,100 new titles being shown. In India, we had about 1,800 to 2,000 new titles being released. So for us, what's important? Our important is to have movies starting after every 30-40 minutes, to have different genres playing for different audience tastes, to have, whether it's a blockbuster or whether it's a normal movie, one only comes to know after it's opened on a Friday. However, audiences liked it. And today, let me tell you, the audience is very, very discerning. They know what they want to watch. So I would say for us as an exhibitor, and also for me as a film patron, as a movie lover, I would like to see various genres, various languages, various stories in a cinema hall. So I would not like to differentiate between a normal picture and a blockbuster picture. For me, a picture is a picture, and I would like to watch any movie where a story has been told differently.
Right. And the last question, if I may, is, we are entering into a phase, once again, where there is a little bit uncertainty, but we are coming out of it possibly with more confidence given our past experiences. If you look at the advertising, side of things, that typically is the last variable to recover. But we are also in a phase of very high cost inflation for, some of your, some of the people who are advertising on your platform. So do you believe that this element could take a little bit longer, maybe even 2 or 3 quarters, till it comes back to normal, or is that being a bit too pessimistic?
Well, I would say a quarter for sure. I wouldn't say that it'll take 2 or 3 quarters, but a quarter for sure. But what we have seen is the advertisers which have come back to us are fashion and lifestyle, FMCG, e-commerce and telecom, BFSI. So people are coming back. They are taking baby steps for sure, but they think that cinemas are still is a very, I would say, good way of advertising, because the audience over here has got nothing to do. It's like a captive audience they have, and this will continue happening. So maybe a quarter more, but then we'll be back to normal.
Got it. Wish you all the best. Thanks.
Thank you. We have the next question from the line of Aditya Sharma from Ambit Capital.
Yeah. Hi, sir. Thanks for the opportunity. Sir, you highlighted that we have a plan of opening another 935 screens post FY22. Just wanted to understand, can you elaborate more on this, when we can reach this target, and because it looks quite ambitious.
No, it's not at all ambitious. This is the pipeline we have, Aditya. And we have already opened in 1 year about 85 or 86 screens, so that's not difficult for us. And going forward, I've always said, is that we are capable of opening at least 80 to 100 screens year on year. And even when the entire world had come to a stop in calendar year 2021, we opened 41 screens. So opening screens is not a challenge at all. It depends that when we will get it from the developers. And looking at the construction stage, today also, as I said, that we have already opened 24 till now, and in the next 2.5 months, we'll be opening 17 more screens, making it a tally of 41 screens for this financial year also. So it's not an ambitious target. It's something which we have been doing and doing rather well since the day we have started our company. And I always say that we are in a growth phase. And opening about 80 to 90 screens is something which we will be doing, if not more, year on year.
Got it. Just wanted to check one more thing. Isn't there any supply issues, as in we are present only in malls, and malls are also suffering along with us. So is the construction happening at the same pace?
Absolutely. You'll be surprised to see that whether it's the metro cities or tier 2 and tier 3, the construction of malls is taking place.
Okay. And sir, most of our incremental screens probably would get added in southern region where we are under indexed. Is that right estimation?
Well, it will be a pan-India expansion. We always say that we are a pan-India player, and our expansion strategy is pan-India. So whether it's down south, up north, east or west, depending on which good property we get and which is a good mall, we'll be opening there, and those are the properties which have been signed.
Got it, sir. Sir, I just wanted to understand and a trend which I just wanted to check with you. So the SPH is quite high, and only a selected blockbuster movies are doing well, the movies that are well made. Is that only people with higher disposable income are coming and spending time, and the other people who are a little below in terms of earning capabilities are shying away from
Aditya, I just can't hear you. Could you repeat your question? I just can't hear you at all.
Okay. Sir, what I wanted to check was, so the SPH, the food spend is increasing, and there are only few movies that are doing really well, right? So are there people who have very high disposable income coming to the cinemas, and the people who are not so well in terms of their earning capabilities are probably shying away from coming to cinema? Is that assumption right?
No, not at all right, Aditya. We have people across all walks of life coming to Inox. And as I said, that the movies which we are talking about are blockbuster movies with a blockbuster pricing. And that pricing has been historically kept since the time we started our operations. So it's not that only people with deep pockets are coming to Inox. It's across all walks of life. And you talked about higher SPH. I had earlier in my answers, various answers, given reasons why the SPH was high. But your question that is it only people with high disposable income coming to Inox and watching movie? The answer is no.
Got it, sir. Thank you so much.
Thank you. We have the next question from the line of Arun Prasad from Spark Capital.
Hey, I hope I'm audible. Thanks for the opportunity. I joined late, so apologies if the question is repetitive in nature, but so some of the big banner movies released during the quarter, like Suryavanshi or 83, it was ready at least for 1.5 years before, and producers chose to withhold the content for the long period. We know this. Given the box office collection of these movies versus the interest cost of holding these movies for such a long period of time, with the hindsight benefit, it probably doesn't make much economic sense. So my question to you is that in your interaction with the content producers or movie producers, do you sense that the producers are acknowledging this about holding the movies for a long period of time? If so, what is the reason for the recent deferment of some of the big banner movies like RRR and all? Because it clearly doesn't make much sense to hold for a long period of time. So isn't it prudent to quickly release in this quarter when the opportunity presents?
Well, I think the actual answer can be given to you by the content creator, not by me. But from the other side, what I can say is that everybody wants the restrictions to go away. And once they have made a movie and held it for a long time, might as well hold it for another month or month and a half. When all the restrictions are lifted, the night curfews are removed, the weekend closures are lifted, and so that people can come out and watch the movie with family and friends. So if I'm a producer, I would really wait for cinemas to open in totality, but that does not mean that movies are not being released. We have seen what happened with Suryavanshi, 83, Spider-Man, Anathe, and all these movies, Pushpa, even with capacity restriction, people came out and watched these movies. So what's important is the quality of content. What's important is the story which is being told. And I think the producers of movies who've held back their films, I think they're waiting, as I said earlier, for normalcy to resume, and then they will release it. But actually, why are they holding? Why are they not releasing? I think they'll be the right people to answer that, not me.
My question is more about what is likely to happen for the deferment that has happened in the last week. Is it going to be they are going to hold it for 3 months, 4 months, or is it the next immediate opportunity when the screens are opening, they would release, especially those regional movies who don't have any dependence on the Western Maharashtra or Delhi bill?
Well, Arun, what we expect is that movies will start releasing from first week of March onwards. That's what our gut feel is. And when we speak with producers, this is the feeling that we get from them.
All right. Thank you. That's it.
Thank you. We have the next question from Ashok, who is an individual investor. Please go ahead.
A very thanks to the management team, especially Mr. Tandon, for presenting such a good set of numbers and the approach the team has followed till date. So my very first question is that what exactly management forecast their progress in the next upcoming 5 years, in keeping a sense that there is an OTT platform which is going on, and there are multiple players who are coming on a daily basis. So how good we can forecast that after 5 years, if I am a shareholder, what exactly I should think that there should be a specific thing to remain invested in Inox?
So, Ashok, let me tell you, movies are not going anywhere. We Indians, we love our movies, and you must have heard me saying this many times. Watching a movie is in our DNA. Today, we as Indians, we are not an outdoor race. We don't go cycling, we don't go trekking, we don't go hiking. For us, an enjoyment, Ashok, is going out with the family and friends, eating food, watching a movie, shopping, and coming back. And that will stay with us. That's one. Number two, for any celebration, and that's again in our psyche, for any celebration, for any thing which is good, which happens good to us and in our families, we say, let's go out and celebrate. And watching a movie is one of those celebrations that we do. Number three, you talked about movies coming in OTT. Well, let me tell you, with the advent of OTTs, the quality of films that are being made has really gone up. So it's beneficial for the cinema exhibitors as well as the OTT players. I would also say is that OTT and cinemas will always coexist. They will complement each other. It's not that they will fight with each other, they will complement each other. And let me also tell you one thing, that every content creator or every talent wants his movie to be released on the large screen. Today, if you and I are made to act in a film, we'll say that why isn't our movie being shown on a large screen? So it does a lot to the psyche of the producers, the directors, and the talent when the movies do well on the large screen. And we should not forget that about 60 to 65% of the revenues which a film garners, it garners from domestic theatrical. And that's a big chunk. And how a movie performs at domestic theatrical depends on how much he will get from an OTT platform. So most of the OTT platform players first wait for the movie to be released on screens. They see that how much business it has done, and then only they offer a price to the content creator. There may be just a very handful of movies where it's sold to the OTT player before it hits the television, the cinema screens. Otherwise, that's the norm. And we all know that we love going out. Today, we have various food delivering options, but still we go to restaurants are chock-a-block. And similarly, it will happen with movie halls. Let me also tell you the future of films in India. We as exhibitors, we want to de-couch our guests. We want to ensure that when you come to a cinema hall, when you come to an Inox, you are pampered. And hence, we are spending a lot of money on the three pillars which we have, which is luxury, technology, and service. When I talk about technology, we have got various formats. We have got what's called a megaplex, where every format known in this world is under one roof. So be it an IMAX, be it Screen X, where you can watch a movie on the side walls, be it MX4D, be it a LED screen where there's no projection, it's only an LED screen, a theater for kids, in Insignia, which is nothing but 100% luxury. So we are ensuring that the movie is watched in an ambience where people would love to come again and again. Where technology is concerned, again, we are using the best of projectors and best of sound system so that the movie is shown the way the director intended it to be shown. So we're doing a lot of steps. Where food is concerned, I just spoke about food, that what all we have done to increase our SPH, to increase our strike rate. And also, I can talk about the menu, at least 250 items we have in a menu in some of our screens so that people watch the movie and eat food simultaneously rather than eating food before or after the movie. So in the next 5 years you spoke about, Ashok, is cinemas aren't going anywhere. They're only getting better. People will come to cinema halls, occupancies will increase, and players like Inox will keep on pampering our guests.
Sure. Thanks, sir. And my last question to you is that considering the future growth prospect, so as I'm a very small retail investor. So whether I should be assured that whatever the investment you are going to make for capitalization, are all those capex going to be funded by internal accruals, or we are going to take a leverage, means to take a debt?
Well, difficult to say, Ashok, how it is. Today, we have got a very, very strong balance sheet. We are a net debt-free company. How things pan out will be very difficult for me to say now. But we believe as a company, we believe that the debt should be minimal and all our growth should take place from internal accruals.
Thank you, Ranjan sir. As usual, you have given us this sort of answer. Thanks a lot.
Thank you. That was the last question. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
I will